All right, so welcome everyone. This is Strizzy from Strizzy Report, and today we are going to be talking about Baltimore. I'm on the landing page here at strizzyreport.com. All you got to do is go over there. If you love this information, just go ahead and subscribe for free to our newsletter. It's the Smart Movers Club, and then you can go see everything we have here that's available for you. But today, what we're going to do is go right to the goal here. And the goal is tell you about Baltimore. So I did a report, and this is for investors. I did a report, and it's Baltimore Metro Investment Outlook. And hopefully, if you're thinking about investing, this will help you. Guys, before we get into it deeper here, because we're just going to go over everything that's in here, you could go over to products. If you are looking for a city yourself, or a town, or a region, this is for you right here, the Regional Investment Report. I do the reports for you. I get the data, and I print you out a custom data-backed report for a specific city, county, metro. For real estate investors, it includes price trends, rent-to-price ratio, migration, job growth, housing permit, history, indicators, migration, all of it that you'll need to make a decision. So go over there and check out the products and see if there's anything that we could help you with. But let's go back to the report. We'll check out Baltimore and see the type of reports. This is not as deep as we give our investors. It's more like maybe 15 pages of data with charts and graphs. This doesn't have any. But we'll go through it. So executive summary, Baltimore Metro Investment Outlook. The greater Baltimore metropolitan region is undergoing a strategic reinvention. Once a manufacturing titan, today it is becoming a diverse hub for life sciences, logistics, cybersecurity, and healthcare. For real estate investors focused on multifamily and commercial development, Baltimore offers a compelling opportunity. Why? A resilient labor force, massive demand for affordable housing, underutilized land, and high-growth industries backed by federal, state, and local support. However, this potential must be weighed against legacy challenges. Guys, these are the things that people think that, oh, it's just let me go invest in an area. Let me go see what it has to offer. No, you have to find out the bigger picture, the context behind the neighborhood, the context behind the city, the context behind what has been trending, what has been shifting. There has been legacy challenges in Baltimore with economic inequality. What happens with economic inequality, guys? When you have that, then there's a thin line between, middle class poverty, working class poverty. What happens is crime. Okay. And we have to get serious. Okay. When there's economic inequality, that comes with another piece that we have to speak about. Aging infrastructure. What comes with that? If people aren't moving around, grooving around, right? If the roads aren't being worked on, if there's not a lot of public transportation, if broadband, if things like sewer, water, all these infrastructure that the city has to take care of, then we're falling back on why would I invest in that place with these challenges, right? If the city's not doing anything. So I'm going to show you how to look all of that up. In this report, we have everything, right? So here we go. Economic history from blue collar to biohub. That's what's happening. SWOT analysis. We'll go straight to this. Strategic location, federal cybersecurity jobs, high education levels, active port. Okay. We all know what happened here in a few years ago with the bridge that collapsed because of the freight ship, right? Just the collapsing of that. So that was a setback for Maryland, for Baltimore, right? Weaknesses: pockets of high crime, legacy blight, skill mismatches in the workforce. Now, there's tons of areas here that you could purchase under 100K. I even looked it up, okay? I looked it up, I saw it. But then when you go to Street View, when you drive by, when you do more data analysis, you find out that these areas are just not going to do anything for a while. Now, you could be the first to the market. You could be that person that wants to early adopt in that area and sit on this thing for 40 years. Are you going to be that risky? I don't think so, because there's areas in here that you just don't want to go as an investor, okay? Okay, opportunities. It's a federal tech hub status, 16,000 plus vacant structures, okay, for adaptive reuse, increased venture capital. Threats, regional competition. You got DC, you got Philly, uneven broadband access. This is what we're talking about when it comes to infrastructure, okay? Zoning battles as well. Quality of life, the Baltimore MSA offers competitive incomes and moderate housing prices. There you got the median, the income median. Commute times are average, and the area is rich in parks, trails, and culture and waterfront. There's over like 100 neighborhoods in Baltimore for it being such a small city. Let me see if I read that right. How many neighborhoods in Baltimore? Yeah, over 200 actually. So here they are right here, if you're interested in that. Yeah, look at that. There's over 250 neighborhoods. I lived actually at one point, right here, Locust Point, right here, Fort McHenry's. It's a beautiful area right here. Fells Point came up, Canton came up, Federal Hill, Riverside, all these areas around this water came up. Now there's an area right here, Brooklyn, that is distressed as hell. Cherry Hill, I think that's on the come up, but Brooklyn is one of those areas that needs a little bit of TLC. There is a lot of crime in this pocket, as well as drug use, right? This is a high drug crime area, but look how close it is to the water, right? But it's sitting over here with this industrial area that never really connects Brooklyn to the water. But these areas like Harold Park, Cherry Hill, Westport, all with this water area right here. Now there's some real crazy areas over here. We'll get into that a little bit. But we do that research for you. Again, if you have a place that you're interested in, that you're out of state investor, you're thinking about doing some work, doing some investing, or even just wanted to learn on a high level about the area, we could do that research for you. So labor supply, there is 50 million plus labor force with strong healthcare and service sector employment, education, attainment, 44% bachelor degrees and higher. Why is this important? Why do you think these things are important to know the demographics? How many people hold the bachelor's degree? How many is didn't graduate high school? How many is just in the service sector? Like these are important data pieces and assets to know, because if you're in a neighborhood, if you're going to invest in a neighborhood, how can they pay? Right? If you have a bachelor degree, what's the likelihood that you're going to get a job with this 94K median, right? To live in an area, spend money, and develop the area with you. Because people develop the area with you. The investor just gets the property, fixes up the property, but there's people actually have to invest in that. So there is an affordable housing gap. There are only 39 affordable units available per 100 extremely low income renters. Are you going to stay in this low income renting? Now there's initiatives and there's incentives for doing things for low income renters. However, you're backed with that price ceiling where you won't even fix your building because the rent income that you get doesn't even match up to anything that you could do any renovations. So these are the problems where we're finding you try to help people out, right? You're trying to build more communities so people could live and stay above the poverty line. But the income, the federal government, because of that incentive, because of those tax breaks, because of the opportunity zones, you don't get to really explore and do what you need to do. So what I saw a lot of people doing is, let's say they get this entire block here. They'll break everything down, or let's say that even that building there, they'll break it down, put up lofts, but within them to continue getting that tax break, they'll have a portion that's for low income, or it's subsidized. It's not like the full price that you get for the other ones. Okay. Public safety, violent crime is declining. However, 201 homicides in 2024. That's still not good, but it's the lowest in the decade. Crime hotspots are localized, with the city investing in better lighting, surveillance. This is all infrastructure and community engagement. Safety remains a top tenet And investor concern, properties with integrated security and proximity to transit or hospitals outperform. Johns Hopkins, there's a lot of movement that even just 2 years, 3 years ago, around that Johns Hopkins area, they had a lot of movement because you have residencies, right? The doctors come in, they do their residencies, a lot of movement in that area, a lot of productivity. All right, so let's go to business attraction. Boom. If you care, new employers seek space near Fort Meade, Port of Baltimore, and innovation corridors. Under Armour took up a lot of that space where the Sun Times was, which is the Baltimore paper, I believe. They took up a lot of that space at the port, right next to the cruise ship. So where industrial flex and logistics hubs are top asset classes for appreciation over the next decade. So there you have it. Workforce development, broadband gaps is an opportunity. Over 40% of the city households lack wired broadband as of 2020. This digital divide impacts remote workers and low-income tenants. Developers who integrate fiber-ready infrastructure and partner with digital inclusion efforts will command higher rents and higher occupancy in underserved areas. Think about it. All right. Economic equity, Baltimore's poverty and racial wealth gaps remain significant, but focused policies, including inclusive zoning, minority contractor programs, down payment assistance, are unlocking new buyer and renter pipelines. Smart investors will partner with local equity programs to access incentives, grants, and land use advantages. Again, this is great as an investor, being able to partner with local government and get these incentives, these grants, and be able to swap and zone and rezone and flex different types of usages. However, what can you get out of this property in that neighborhood? Baltimore's diversified economy, port infrastructure, and federal job base provide long-term resilience, climate adaptation plans, pandemic learnings, and industry diversification reduce risk. Investors should prioritize properties with mixed-use potential. That's the best, really, where you could have business on the bottom, apartments on the top, mixed-use commercial space, as well as residential. Okay. All right, strategic action plan for investor target zones focus on areas near transit lines, hospitals, and university campuses. That wins in Baltimore, okay? That's a project that wins in Baltimore. Now, you could look online in, let's say, LoopNet, or you could look on just any old multifamily, anything, and see what's next to a hospital, see the prices there, see the prices that was recently sold. Like, that's how you start doing these researches. Okay, value add projections, and in the full report, you get that. We will actually do that for you and get the latest sold numbers. All right, value add projections, reuse vacant city-owned structures, target moderate rehab over high-end flips. That's it. Participate in LIHTCP PACE financing. Now, I give you all of this. Now, you have to go out there and see what everything is, right? Okay. And they explain everything about PACE here, refinancing tool to do it. But all of this information is out here for you, okay? I just point you to the direction. All right. Infrastructure adjacent by near planned transit corridors, broadband, fiber expansion, and innovation zones. Public-private leverage, use state and federal incentive stacks to reduce cost bases. Okay, here's a notable multifamily. These are bigger commercial, right? Because we got 1350 units, 732, 252. These were all the sale price and the price per unit here, all the sale price that happened very recently, 2024. So we give you that market overview and investor insights, as well as investor outlook. The entire outlook is Baltimore's transitioning in 2025 to 2035, and we could go as far as 10, 15 years, which will kind of be more accurate than go out past that. But we could do 5 years within, now to 5 years, what it's going to look like and projected based on the data. But in 2025 to 2035, the region presents a once in a generation play, right? To be early in the reinvention backed by both federal dollars and local political will. For multifamily and commercial real estate investors, this means actionable profit opportunities through value add rehabs, transit-oriented development, and hybrid use properties that align with the region's new economic DNA. So there's a full report. This is just what I put here on the website under reports. You could go check out. I do a lot of different reports, not just for investors. I do some for retirees. Others, it's just a full with data, right? So you can go check out what we got. But if you would like your own report in your own place, maybe you're thinking of a region to invest in, maybe you're thinking in your own home state and you just don't have the numbers, all you have to do is come to products here. When you learn more, we will schedule a call. We want to make sure we know what your needs are, what you're looking for, so we can get right on pace with it. So these don't just go straight to a payment. These goes to a call. You speak with one of our team members and we get to the nitty gritty, but you will get your report. It is a 10 to 15 page report, full report with graphs, data, so you can make an informed decision. And if you just go back over to reports and just see what we got, kind of what Strizzy Report does, we'll just do all of these. Retiring in South Carolina, here's your blueprint. Kansas, a good, state-by-state guide to bankruptcy exemptions, fastest states to establish residency for RVers, van lifers, nomad, the top 10 tax advantage states for retirement. This is a huge report that we put out. Again, we don't gate information. This is all of it. Look at this. This is a 30-minute read that we put out here for our retirees that wants to know more information about the different states that they could go to and get the best tax advantages. So there's 10 states here. It is a long read. Then we put it all in a graph for you or a table. So head over to strizzyreport.com. Again, if you're looking for reports, if you're looking for a strategy call, if you're looking to relocate and don't know where to start with us, Strizzy Report. We could give you that data that you need to help you make informed decision and save money in the long run, grow your income, find freedom, all in one place here, guys. We have it all. So check us out. Peace.